Hey everyone, this is John Gandy from your local CFA Society. We are fortunate enough today to have one of our upcoming speakers with us, Salvatore Ruscitti, who is with MRB Partners. How you doing, Salvatore?
I'm very well. Thanks. Yourself, John?
Yeah, hey, thanks for joining us and being willing to present to us in a few weeks. As we do typically, we like to do a little promo video just to kind of drum up interest in the upcoming lunch meeting. So just to remind everyone on the front end, it's going to be in Chattanooga on March 3rd, which is a Tuesday, and then the following day on that Wednesday, March 4th in Knoxville. So we'll dive right in. Just a quick introduction. As I mentioned, Salvatore is with MRB Partners. They are an independent macro research firm that provides investment strategy advice across multiple asset classes. At MRB, Salvatore is the US Equities strategist. He's got nearly 3 decades of investment strategy and research experience across both the buy side and the sell side. So again, thanks for joining us, Salvatore.
My pleasure.
So he's going to be talking to us about the outlook for US equities and kind of MRB's views on sector allocations and just more broadly how they view the market right now. So we wanted to introduce a couple of questions just to set the stage for his presentation in March. So one, obviously there's been a lot of focus on multiples. Do you feel like they're stretched right now, Salvatore, or what's your view and the firm's view on multiples here?
Well, I think in aggregate, our view is that the U.S. market is obviously fully priced. If you look at the forward PE multiple, it's quite high if you X out the TMT bubble and the leakage of the bubble. So we're quite elevated on multiples. I think there's a lot of good news discounted in stocks. But at the same time, interest rates are low, inflation is quiescent, and credit spreads are very low. So it's not to say that the multiple can't be supported here, but it does reflect that there's a lot of good news that's been priced into the equity market. And so I think that, we need follow through in terms of the fundamentals. Otherwise, I think we have some vulnerabilities. Having said that, if you scratch beneath the surface, of course, there's, quite a dispersion of valuations underneath the aggregate multiple. And there are some sectors that are cheap and there are sectors that are very expensive. But I would say that the popular areas of the market have gotten fully priced, and tech being one of them. There's a lot of good news priced into valuations for tech, and some parts of tech are priced for perfection. So I would say that the multiple is reflecting that there's a lot of good news that's been discounted in the markets.
Sure. No, that's helpful, and that certainly makes sense. And I guess one other question that we'll hit here before we end the video, don't want to spoil too much of your presentation, but obviously the virus in China is very topical right now. We won't dare to ask you your views on what's going to happen with the virus. Obviously, neither of us are doctors or virologists, but it is interesting to me that investor sentiment has been hit so hard. Maybe a sign that we're due for a bigger correction. What are your thoughts on how the virus has impacted markets so far, and just kind of generally what that means for sentiment?
Well, I think it reflects what I said earlier about the market being priced for perfection. Mm-hmm. Sentiment's very difficult to measure, but some gauges are stretched, other gauges are less stretched. But the reality is that we've had quite a run up in stock prices on the anticipation that we would get better earnings. And so anything that calls that into question, I think is going to cause a reaction like what you're seeing. What we've seen this week in the equity market. So I do think that sentiment is stretched, and there's a lot of anticipation of a follow through in the fundamentals. And to the extent that we have some delay in improvement in economic growth because the coronavirus causes concerns about the outlook for global growth. I think that we can pull back and we can have a correction. I think it's healthy. But at the end of the day, the reality is that if you look at some positioning surveys last year, positioning was sort of light. So we had, pullbacks have been bought so far. So yes, sentiment I think is stretched, and I think we can easily have a pullback. Whether we have a correction of 10%, I think will depend on how the economic data evolves over the next few months. And our view is that we are constructive on the global economic outlook, but at the same time, we've been very careful to point out that we only expect a moderate upswing in global trade and in global manufacturing. So if you're delaying a moderate upswing, I think that there are vulnerabilities to a 5 to 10% correction.
Sure. No, that's helpful. So with that, again, I'll remind everyone, we've got the meeting with Salvatore and his full presentation coming up about a month from now in Chattanooga. That's going to be on Tuesday, March 3rd, and then followed by the next day, a lunch as well in Knoxville on Wednesday, March 4th. So once again, thanks, Salvatore. Safe travels down from Canada. Hopefully we'll give you some warm weather here in about a month.
Great. I'm looking forward to seeing everybody. Thank you, John.
Great. Thanks. See you all soon.